Okay, let's take this conversation across. We've got Nischal Maheshwari as well joining in on the show. Nischal, hi, morning. We were just discussing what's going on with the FMCG space. Britannia's numbers again and excellent set. The margins are a beat. It's in line when it comes to the top as well as bottom line. And the price action that we've seen in Nestle ahead of Unilever's numbers today, Nischal, where within FMCG are you finding comfort?
Morning, Aisha. I think foods is the business within FMCG basically where we have been very positive and we continue to remain so. Except for yesterday's Britannia numbers are a bit disappointing to us basically because we were expecting more than 16% top line growth, whereas they delivered around 12.5. So yes, it was a strong number, but lower than what was the expectation was. Within I think the other company which has declared results has been Bajaj Consumer. There, I think the set of numbers has been good. So overall, I believe foods will continue to be doing better than the other personal care or anything else. Foods will continue to dominate in this current quarter. And I think Nestle is also doing well basically, or the increase in the stock prices as you are mentioning. I think based on expectation that foods is going to continue to do well in the current quarter.
Yeah. Nischal, just looking at ACC's performance, and this is really a dhamaka set of earnings. One is wondering whether the exuberance is going to rub off on the likes of a Shree Cement, Ultratech Cement, etc. as well. What are you making of the prospects of cement going forward?
So I think this has to do more with the region-wise spread out of these companies basically, because I think East and North continue to do well and South was okay. And ACC's spread in the South is around 35%. Still it continued to show a very, very strong growth. So I think Shree, which is predominantly in the East and North, should deliver a good performance in the current quarter. Overall, we believe that cement will be doing well. We have to wait out basically that because this quarter is obviously the monsoon quarter, so you would not see huge surge in volumes. But if the festive quarter and the next 2 quarters are more important for the cement guys, we continue to believe that this year will obviously be flattish kind of a growth, but around 7 to 8% kind of a volume growth next year is what our expectations are as far as cement is concerned. So overall, good set of performances, but we have to see in context of prices. I think there has been a good runaway in prices basically, and that seems to be slightly ahead of the expectation.
Nischal, sometimes I wonder where is so much of demand coming from, whether it's autos or consumer or white goods. Auto companies are saying that never seen it so good before. Flipkart and Amazon, look at the comments which are coming from them, considering that right now the festival big season sale is on. One side, economy is contracted, job losses have happened, there is a stress in disposable income, and yet major discretionary and consumer dominated categories have made a comeback. Where is this demand coming from?
So Nikunj, I agree with you that there has been job losses. In the last number, I think CMI or somebody put it that for the white collar there was around 50 lakh jobs which have been lost. But what has happened is simultaneously is there is this lull period of almost 4 or 5 months where there was hardly any movement on the ground. So I'm talking from April to almost June, July. There was 40 to 50% lesser than the last year. And that I think is a lot of this pent up demand is there, which is catching up. I would want to see this whole demand going beyond this festive season. And then I would be very comfortable saying that we are back on track. Because if you look at it, most of these companies will still deliver a flattish or a negative growth for the full year. So that first quarter, basically, where you lost almost 70-80% of your volume, that is catching up. Game is happening. But having said that, we are also a bit surprised that the demand has come back so strongly. So I think there is something to do with the fatigue, basically, where people have been waiting, and now I think some amount of comfort is there to move out to do some stuff, and that's what is actually all this demand is catching up for the white goods, for the two-wheelers. Two-wheelers, partially, I would say that traveling individually and avoiding the public transport, I think some demand has to come from there. As far as white goods are concerned, I think people staying back at home, and they are finding basically that they require much more things than what they would have been done earlier because of domestic health. So I think that's what is driving the demand for the moment. We need to see this beyond the festive season, current festive season, and then I think we are back on track.
How would you view a stock like ICICI Bank, and if you compare with HDFC Bank? I heard the notes of HDFC Bank con call last evening, and they're firing full cylinders. Do you think that ICICI Bank is going to follow the same path which HDFC Bank has shared?
So your analysis was very apt, Nikunj, earlier, basically, where you said this is more of a corporate-dominated bank and the HDFC is more of a retail-dominated bank. The transition is happening, no doubt about that, basically, but we have to see whether ICICI also is able to get the growth or not. Like HDFC has got a 15% plus kind of a growth on the AUM. Let's see basically whether ICICI, because on the corporate side, they have been very, very careful. So if you have a corporate-dominated book, whether they are also opening up the strings of the purse or not, let's see basically. But otherwise, I believe most on the other parameters, they are more or less there along with the HDFC Bank and the lights. Though obviously, as far as valuation is concerned, it is much cheaper than the HDFC Bank. But I think overall, what we need to see is basically wait for the December quarter and see once the moratorium is over, how much of these problems basically crop up into the balance sheet, whether they are well capitalized or not, how much of a hole basically each of these categories take. So let's just wait for the December quarter before increasing our exposure onto the banking sector.
Okay, Nischal, let me get your view on HUL in particular. You haven't seen much action there. We saw some brief move in ITC recently, that too perhaps some focus on really what's happening to the cigarette business, which was a different topic of conversation. On HUL, are you looking forward to those numbers, or they would really be you'd really be indifferent to those?
No, I think lever sets the tone for the whole FMCG sector, basically how it's going to be, and how not only for FMCG, but it's sort of consumer, especially the rural demand. So definitely it will be a numbers which will be keenly looked at and followed. And we are also optimistic that lever will deliver a good set of numbers again. I think the margin, most of the FMCG companies are improving their margin, and so will lever will. Having said that, I don't think so that it's going to create much action on the stock market, because I think everybody seems to be in the same camp of being overweight consumer goods. And I don't think so people are there changing in a hurry, basically, because the other big weight on the Nifty, which is banks, still people do not have much clarity, basically, whether to be equivalent weight or overweight on this thing. So I don't see much changes happening as far as the stock prices are concerned, but I think the results would be good for lever.
Okay. Talking about some of the other numbers we're watching out for and rural demand as well, Bajaj Auto, I just want to get your take on that, because the divergence also between Bajaj and Hero just seems to be growing even further in terms of performance over the last couple of quarters.
So if you look at it, basically, I think the segments which they cater to are quite different. But Hero is 40% sales coming from the rural market. Bajaj, in the other case, 50% of the sales coming from exports. So it's like a totally different markets, basically, which they are catering to. Urban, for both of them, basically seem to be a bit slow. rural for them, for Hero has done well, whereas for Bajaj, exports are doing well. So that way it is balancing out the two. But Hero seems to be in a better spot basically at the moment, because I think the rural has done really picked up pretty well for Hero. So our preference is also basically Hero, Bajaj, and Eicher in that kind, in that order.
Would you chance your arm in auto ancillaries now, Nischal? Because if auto demand is coming back, the ancillary demand should automatically come back.
Definitely, Anuj. I think there are several companies basically we like out there, though we do not have it under coverage. But with my earlier knowledge about them and experience, basically, I think Motherson Sumi is at the top end. Then there are several companies basically like Varroc Engineering, which is largely catering to the two-wheeler and Bajaj per se. Minda Industries, Minda Corp. So several of them basically look to be in a good spot at the moment, because I think the demand is back. Exports are also doing pretty well for the guys who are doing it. I would be a bit wary as far as people who are, or auto ancillaries which are dominated by the CVs market basically, because CV is still to take off in a big time. And even going back to pre-COVID levels also, I think CVs will take a bit of time, maybe a couple of quarters more. So wary of the auto ancillaries which are predominantly CVs, but I think two-wheelers and cars, I think seems to be okay.
Nischal, where is it that you stand on the entire home improvement segment? Exactly what we were talking about cement. Would it also hold true for companies within the MDF segment, or for that matter, the entire plywood segment, tiles, sanitary ware, what have you?
So we cover a few of them, basically the tiles and the sanitary ware, and there we have been surprised with the demand in the last quarter. There has been instances where in some of these categories, basically they actually ran out of stock. So I think tiles and sanitary ware seems to be doing pretty well. We were also surprised that though the real estate is not doing well, but these categories actually suddenly came back with a surge in demand. So my thought still remains to be that those first 4 months, 5 months, basically where you saw almost 70-80% demand fall, that is what is actually now picking up. So this kind of a V-shaped recovery in across sectors we are seeing, and that's happening in these sectors also. But plywood and all we do not cover at the moment. But I'm saying basically it will not be very different from the tiles and the sanitary ware sector.
That, Nischal, thanks as always for taking the time out and joining in.